Hello and welcome to this show. I'm the host. There is a new frontier in global finance, and it is here in Shanghai. The Shanghai Stock Exchange is fast becoming the destination for companies seeking an alternative to Western markets. This is especially true for those in the technology sector. What started as a trickle has now become a torrent. Chinese tech firms are ditching the New York Stock Exchange and listing their shares in Shanghai. This year alone, 13 Chinese firms have made the switch. They include big names like Alibaba and JD. And together they have raised nearly $12 billion through share sales. But why Shanghai? What makes this city so attractive for investors? And how is the Shanghai Stock Exchange faring amid all of this? We'll answer these questions tonight, starting with the big question: why Shanghai? It is understandable that companies would want to list their shares in Shanghai. After all, this is China we're talking about, the world's second largest economy. It is also the largest by population. And over the last 2 decades, Chinese companies have done quite well at listing their shares in Shanghai. But that was then, and this is now. Today, China's economy is facing serious challenges. There are doubts over its growth story. There are doubts over its zero-COVID policy. And these doubts have been reflected in the markets. In the last 1 year, the Shanghai Composite has lost 11%. So clearly there is no guarantee of making money in Shanghai. Then what is attracting investors? We can think of 3 reasons here. Number 1, the opportunity to tap into China's vast domestic market. Despite the recent slowdown, China remains a very lucrative destination for investors. Its middle class is the biggest in the world, and its purchasing power is growing. Just look at these figures. In 2021, China's total retail sales topped $33 trillion. Compare this with the U.S. retail market, and you will see the difference. America's retail market is worth around $27 trillion. Another interesting figure here: around 60% of China's consumption is driven by the services sector. For the U.S., that figure is 80%. So basically, China still has a lot of catching up to do. And this offers a great opportunity to companies looking to tap into the consumer market. Reason number 2, the Shanghai Stock Exchange is trying to position itself as a friendlier market, especially when compared to the U.S. The New York Stock Exchange has strict listing requirements. Companies must meet certain criteria to qualify for a listing. The Shanghai Stock Exchange does not have such rigid rules. In fact, the Chinese bourse is dominated by state-owned firms. At last count, more than 50% of the companies listed on the Shanghai Stock Exchange were owned by the state. So if you're a Chinese company looking for a listing, it makes sense to choose Shanghai. You get preferential treatment and fewer restrictions. Reason number 3, the Chinese government is pushing this. Beijing wants more and more companies to list at home. It is offering incentives to both investors and companies. Take a look at this. Chinese companies raised a record $100 billion through IPOs in 2021. That's $100 billion in 1 year. Around 40% of this came from the technology sector. These 3 factors are driving Chinese companies to list at home. They want access to the domestic market. They get better treatment in Shanghai. And 3, the Chinese government is making a conscious effort to develop its capital markets. So the trend is unlikely to reverse anytime soon. This is good news for the Shanghai Stock Exchange. After all, it has been overshadowed by its bigger rival, the Hong Kong Stock Exchange, for the longest time. But things are changing now. Last year, the Shanghai Exchange overtook Hong Kong to become the biggest equity market in Asia. Its total market capitalization was $5.8 trillion. Hong Kong was second with $5.2 trillion. What about India? How does the Indian stock market fare in this list? The Indian exchanges are way down. The Bombay Stock Exchange is ranked 11th with a market cap of $2.5 trillion. The National Stock Exchange of India is 13th with a market cap of $2.2 trillion. So as of today, the Shanghai Stock Exchange is the 3rd largest in the world. Only the New York Stock Exchange and Nasdaq are bigger. And considering the trajectory of the Shanghai Exchange, it may not be too long before it becomes the biggest stock market in the world.